Good morning. It's Wednesday, August 30th, just before 6 a.m. Central Time. Bit of a sleepless night last night. The hurricane just east of where my location is. We got a huge storm surge coming up on the Gulf of Mexico. The water is really close. I mean, I should do a weather update. It's kind of a bit of nerve wracking here as far as how high it is, but that's expected when you got a Category 4 hurricane. But overnight here, precious metals, they're a bit weaker. Gold trying to come back here. We've got a lot of data coming out here today. There was a big surge yesterday. Bit of a bad news equals good news. Risk on vibe. So current market conditions, you got gold unchanged 1965, silver down 16 cents 24.97, copper down 1.5 at 382, and platinum up 2 at 988. So platinum really honing in, getting closer to that $1,000 level. So the big news was JOLTS. That's the job openings. It was a big miss. Also a decline on consumer confidence. What they did was it sent the 10-year Treasury yields down about 8 basis points, triggered a risk-on rally with the S&P 500 tacking on about 1.5%. Yields coming down, could be car demand picking up, and also you could see platinum pick up on it. So I think that could be part of the reason why we're starting to rally here on platinum. There's been a lot of lobbyists, a lot of things like that, a lot of people coming out saying that, hey, car demand's been really weak. We need to get this thing turned around. So other news here, API, big draw. We saw crude oil futures kind of surging back up again, rejecting some of those lower levels, and also the hurricane is going to take off some of those exports, some of the crude oil that's moving around, and it's going to be a pickup on demand on like diesel fuel, things like that, things that utilize on generators and etc. So a couple things that I'm watching here, dollar index starting to break down, kind of rejecting those higher levels coming down, and I kind of looked at a couple different levels here, similar to like how I was looking at the gold and silver, how it would carve out a bottom. The dollar index to carve out a top, I really think we need to take out it was the August 22nd low, which is 102.90. I think that'll mark a top on the market. And then as you get that breakdown, 102.50 is the 200-day moving average, and 102.18 will shift it from a bullish trend to a neutral trend, and then we'll have some other levels, probably like 102.80, where it'll trigger a bearish trend. So, but all we need is some of these breakdowns, like 102.90, 102.50, and I think that's where gold, remember, gold is very inversely correlated, should push up and will retest that 2000 level. So currently though, the trend is still bearish on the gold market, but we're getting really close here, so don't crucify me on this one. So it's holding just below the neutral trend, which is right at that 1971 level. So a couple key levels to look at. 1950, remember, old resistance, new support. So that 1951, we couldn't close above it. Now if we close below 1950, that's going to be that support level, and also a slight red flag. The 200-day moving average sitting at 1974. And then on silver, the current trend is, yay, bullish. So, but there is a small problem here where what you want to see, and I've ran like turtle trading systems and things like that for like the last 20 years. You want to see when the market triggers a bullish trend that the next day it opens up stronger. If it opens up weaker, you're going to want to be a little bit cautious, a little bit skeptical of the rally here. And remember, silver has been in a $4 trading range. We haven't broken out to the upside, and we just haven't had that catalyst to do the 30, 40, 50, the silver squeeze and everything else. So the key levels here: first support 24.50, second support 24.07, trend reversal point 23.52. So we break back below 23.52, that's going to shift it back to a neutral trend. Outside markets are mixed. You got the equities that are pulling back after that surge yesterday, completely natural. Dollar down 6, 103.41. Crude oil up 61 at 81.77. Treasuries up 2, trade at 414. You want to watch today ADP. This number is so sketchy, it's not even funny. It could screw this whole market up. You see ADP come out 250, 350, it's going to be over. Gold and silver are going to fall again. Dollar's going to surge, and treasury yields are going to surge. GDP 2.4%, probably should come in around those expectations here, but if you get another surge on that, that could be problematic too. But it's that ADP number. Don't trust that thing. You got any questions, give me a call, 312-858-7303. Remember, futures option trading involves risk of loss. May not be suitable to all investors. Good luck and good trading.